The name of the company is, this is problem 6. The name of the company is Indian Marine Insurance Limited. Indian Marine Insurance Limited. Form BRA, that's a form of revenue account, and the date is 31st March. Sorry, following information as on 31st December. So here it's 31st December 2016. Okay, so be careful of the year. It may not always be 31st March. It's 31st December. So we start with our schedules first. So now we have the same thing like the last problem. We start with premium on direct business. Okay. Now since we have the actual premium received, the opening balance or premium outstanding at the beginning and premium outstanding at the end, we need to show all the three amounts. So premium received on direct business, the main thing is 46 lakhs plus outstanding at the end is 3,36,000 and outstanding at the beginning is 2,48,000. So this total comes to 46,88,000. 46,88,000. Next we add premium on reinsurance. Premium on reinsurance accepted. Again we have here the actual premium is 7,20,000 plus outstanding at the end is 24,000 minus outstanding at the beginning is 27,000. So 7,17,000. This will come to 7,17,000. Next we have less premium on reinsurance ceded, which is 4,60,000 plus 62,000 minus 37,000. So that total comes to 4,85,000. 4,85,000. Okay, so from here we get our total premium earned, which is going to be, the total premium earned will be 46,88,000 plus 7,17,000 minus 4,85,000. We have 49,20,000. 49,20,000. This we are going to call premium earned net. Premium earned net. Okay. And on this we need to provide, this is the total premium that's earned during the year. On this we need to provide for the reserve for unexpired risk. We need to create that reserve for unexpired risk. So less adjustment for change in reserve for unexpired risk. And how do we calculate this? We need to calculate the current year's reserve minus the previous year's reserve to know how much additional we need to provide. So we have 100% since it's marine insurance business plus the additional reserve of 105%. So 105% into 49,20,000 minus the opening balance. The opening balance or the reserve at the beginning of the year, the last year's reserve is 38 lakhs 45,000, which also includes the additional reserve. So I don't need to add that additional reserve. 38 lakhs 45,000 includes the additional reserve. So this total comes to 13 lakhs 21,000. And after minusing, we get 13 lakhs 21,000 minus from 49 lakhs 20,000. We get 35 lakhs 99,000. 35 lakhs 99,000. We call this total premium earned. We call this total premium earned. Okay. Next, we go to claims. So we have claims on direct business. So the same way, the actual claims are 23 lakhs 50,000 plus add outstanding at the end of the year 2 lakhs 8,000 minus outstanding at the beginning 1 lakh 66,000. So that comes to 23 lakhs 92,000. 23 lakhs 92,000. Now be careful before we go to the reinsurance part. We have some expenses which are incurred specifically with regard to claims, and those expenses are mentioned in the legal fees, and we call them claim settlement expenses and expenses in connection with settlement of claims, which is 40,000. This is included in the legal expenses, so we are going to then minus it from the legal expenses. Besides that, we also have claims on reinsurance accepted. So here we have 3 lakhs plus 44,000 minus 39,000. 3 lakhs plus 44,000 minus 39,000. That gives us 3 lakhs 5,000. And similarly, we have claims on reinsurance ceded. So claims on reinsurance ceded is 1 lakh 70,000 plus 23,000 minus 16,000. And that total comes to 1 lakh 77,000. So our total claims incurred are, the final answer here is 25 lakhs 60,000. Total claims incurred. Okay. Next we come to commission, schedule 3 commission. So we have commission on direct business. We have commission on direct business, which is 2,20,000. Similarly, we have add commission on reinsurance accepted, which is 19,000, and less commission on reinsurance ceded, 26,000. So the total here comes to 2,27,000. Sorry, 2,13,000. 2,13,000. This is our total commission. Now, when it comes to Schedule 4, we don't have anything because all the expenses are supposed to be general expenses. So we don't need Schedule 4. Okay, now before I start, I go back to the format. Is there any question with regard to these three? Anyone needs any explanation for these schedules? Does anyone need any explanation? Anything is not understood? Please ask. There's no harm in asking. Maybe you may help somebody else as well. Is there any questions? Are there any questions? Any questions, students? Okay. So we go back to the format now. So we start with premium earn. Okay. Schedule 1. Premium earn is Schedule 1. And the amount of premium is 35,99,000. 35,99,000. We don't have anything else that is any other income that is related to marine insurance business. In the last problem, we had that interest. Why we took it here? Because they said that it is specifically related to the insurance business. But in this problem, all the expenses and incomes are general. So finally, we get the total here. Total of A, 35,99,000. Okay. Then we move on to claims incurred, which is Schedule 2, and the total claims are 25,60,000. 25,60,000. Then we have commission, Schedule 3, 2,13,000. 2,13,000. And the fourth one that we have is the operating expenses related to marine insurance business. Now we don't have anything, but I still write it because it is a schedule and we have to write it in the form. So even if we don't have anything, it is nil, I still write the amount. So next we get total of B of all the expenses, and the total of B comes to 25,60,000 plus 2,13,000 comes to 27,73,000. Then we get operating profit from marine insurance business. Operating profit from marine insurance business. How we get this? A minus B. So it's 35,99,000 minus 27,73,000. That comes to 8,26,000. Okay. So in this revenue account, we only had the schedules because everything else is supposed to be either general expense or a general income. Next, we move on to the profit and loss account. So we start with operating profit from marine insurance business, that is 8,26,000. Now we have another income, another general income, which is that interest, dividend, and rent received. Interest, dividend, rent. Okay, we are supposed to show the gross amount. This is the gross. And how much is the gross mentioned in the problem? 1,77,000. 1,77,750. 1,77,750. Now, just for information purpose, what I'm going to show a breakup of this. Okay, I'm going to show a breakup of this. We know the TDS deducted on that amount, that is 40,250. The TDS is 40,250. So basically, the actual interest that has been received is 1,77,750 minus 40,250. It's 1,37,500. 1,37,500. Okay, so how did I get 1,37,500? The total is this. The total interest that has been earned is this. But out of this, TDS is so much. So the actual interest received is 1,37,500. I told you when it comes to payment of interest, okay, normally when it comes to payment of interest dividend, they minus the tax and then pay you the balance. And then that tax is credited to your benefit, which is used at the time of filing of returns. Okay, so we get the total of A here. Now our total income, there's no other income, which comes to 8,26,000 plus 1,77,750 comes to 10,03,750. 10,03,750. Now we show all our expenses. So first we have salaries. We have salaries, which is 3,20,000. Then we have rent, rates and taxes, which is 29,000. Postage and telegram, postage and telegram. Postage and telegram is 43,000. Provision, next is provision for tax, but that comes as an item later. We need to mention all the expenses here. And we also have legal expenses. We also have legal expenses. Legal expenses, and these legal expenses are 45,800 in total, but out of 45,800 we have already shown 40,000 as part of the claims, because those were the expenses that were incurred specifically with regard to settlement of the claims. So the actual legal expenses are 5,800. So this gives me the total of B, which is our total expenses. This total expenses come to 3,97,800. 3,97,800. Okay. So next we get A minus B, what we call A minus B, net profit before tax. Net profit before tax, A minus B. So this amount minus this amount, that gives you 6,05,950. 6,05,950. We have a provision for tax less provision for tax, which is given in the problem as 4,40,000. Given as 4,40,000. Now, sometimes this provision for tax may be given as a percentage. Okay, may be given as a percentage, and if it's say given as a percentage of 25%, so 25% of what? 25% of this profit. Okay, remember that. Then we have, this will give us profit before appropriations, which will be 6,05,950 minus 4,40,000, which will be 165,950. Okay. Now we don't have any appropriations. but I'll just write it since it's part of the format. Appropriations. There are no appropriations. So we get the same amount, 165,950. We call this net profit for the year. And then in case we have balance in profit and loss account, balance in profit and loss account that is brought forward or last year's balance. Again, we don't have anything here. And then balance, the final answer is the balance carried over to the balance sheet, which is 165,950. This is the final answer.